Hope everyone's doing well coming into the day. As you can see on the prior day over here, fairly tight range. Let me just do it like this for now, just to keep it easy. First bar of the day. That's good enough. So first bar of the day, big outside down bar, tight trading range. It's really 50-50. You could sell below, but your risk is really big. And when it looks like this, you shouldn't have an opinion one way up or down, which way it's going to go. You can look at a higher time frame, but for the purpose of just this video, I wouldn't do that. Doji bar, so again, tight trading range, it's meaningless. I mean, if you had to do anything, you put your stop up here and sell, but what's your risk? It's, that's 1 times your risk, 2 times your risk is down here. It's just not worth it. Triggered below the low 1, but again, there's probably more buyers below. If anything, traders are probably buying and scaling in. And, again, you can see traders are scalping. Second entry buy, you caught a double bottom, kind of a low 2 variant, high 1, high 2 variant. Do you buy above, put your stop below? You can. I would certainly get out of long, shorts. I wouldn't even really be short. And, pretty boring. This is pretty dangerous. At some point, you'll get a swing, up or down. And it's really just worth waiting. So 4 consecutive bear bars. But again, not much of anything. It's very slow. And, what happens all the time is when you get a range, this range is pretty big. I mean, this is 42 to 34. I mean, it's about 10 points. When you get a range like this, it's easy to lull you to sleep. And you can easily get a sharp move up or down, and it traps traders. Do you buy above this? I mean, again, you can, but what about here? It seems like the market's going to reverse and we're going to go higher. And then you get this. Is this second entry, could this be a trap, a second leg trap? So you have a move up, pull back, and then you have a very strong move up to a double top, and we're pausing. And you have to ask yourself, what is it? This is, what do we really break out of? We broke out of the past 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 10 bars, 11 bars, 12 bars, but it's not really breaking out of the initial range. And then this can happen. And big bars up, and then we just start pulling back. And then you get the breakout. So are we always in long, always in short? I don't know. I think the bears need 1 more bar. You can argue that it is always in short, but probably better for the bears to wait for 1 more bar. And then the bears got their second leg. So now it's always in short, probably stop up here. If you're selling, what's one thing you can do? You can sell, put a stop up here, and go for 1 times your risk. The odds are you'll get a second leg down. If you get a bull bar that closes up to here, maybe you get out. But it's probably strong enough that the first reversal up is going to fail and we'll have a second leg down. Follow through, so good for the bears, increase the chances will go lower. Big bear bar, and then a reversal. So, look what happened. And really you could say maybe it was to here, but I just keep it simple. Here was the breakout of the initial range. Here's the follow through, strong. So I would say it's really 1 big breakout bar and then a follow through bar. But either way, this is always kind of an interesting situation. And this is the first reversal up. It's probably going to fail. The odds are you sell more higher. This will not be the low. That's the odds. Now what's interesting is you've had a tight trading range for a very long time. A lot of traders will say, screw it. Since this got filled, they'll say, screw it. I'll buy this low and I'll buy more above a bull bar. Maybe here, probably better to wait for a second leg down, or at least a second entry buy, so they probably won't buy there, but they'll use a really wide stop. And then that's what I was talking about. And then we get this bull bar. And the problem with this, though, is, let's say they do that. And I'm not recommending, I don't think this is a good idea, because the math, it's very difficult. You know, do you buy one lot, do you buy one contract here and one contract here, or do you double it? Do you buy one contract here and two down here? But let's see what happens. And that's the problem. So again, I don't want to go too far into it. I don't think, because I think that's more of an institutional thing, and I don't think, again, the math can be really difficult. And, you know, even right here, you know, that's what happened, obviously, today. So traders got squeezed. But if we're going back to this point, it's always in short. You don't have to get out. Do bears get out here? They certainly can. Odds are, best the bulls are going to get is sideways. This is not a major reversal. I mean, we went up for a bar and down for a bar. So the bears really can't even, the bulls can't even make a scalp. So the best the bulls are doing is making the market go sideways. And, you know, again, maybe triangle, 1, pull back 2, pull back 3. Do you sell here? You certainly can. I would not. I'd rather look sell at the moving average, sell on pullbacks. Every time we go below a bar, we're reversing up. And the stop's really far. It's probably up here. Now that's, you know, that's a good sign for the bears. The bulls tried to reverse the market here. They failed. Tried here, couldn't trigger above it. And they tried here. We got close to the moving average, immediately reversed down. Could be a double top. You know, if you think about it, the bulls are, everybody wonders here, how big's the pullback going to be? They know that traders are trapped. They know that all the bulls that bought in here and on the way down are trapped. And obviously some got out. What they don't know, and this is kind of what I was trying to explain with this low and buying more lower, is what they do not know is, will the bulls, let me put it a different way. What they do not know is what's going to happen. Or, in other words, some bears get out over here expecting the market to go sideways, and they want to see what the bulls can do. If the bulls can reverse the market strongly, then the bears they'll look to sell much higher. And if the bulls fail just to take control, the bears sell again. So the bulls tried here, they tried here, they tried here again, failed. They tried here, failed. So at some point the bulls are going to give up and the bears are going to sell aggressively, which is, you know, kind of what happened here. Second leg down. Consecutive bull bars. So for always in bears, probably get out above this bar, this bar. This could just be a final flag. And, you know, again, the odds are we're going to get a second leg down. And the odds are there will be bulls here, like I said, that'll buy here and buy much lower and be able to get out of break even. And again, disappointed. The bulls need to get above the moving average, and they're having a hard time. Now, 3 pushes down, sideways for many bars, big outside up bar. You know, surely this is the low, and it's a wedge bottom. Surely this is the low, and we're going to reverse. You know, this is going to be the time we're going to get above the moving average and inside bar. Now, this was, I believe this was the Fed bar, the next bar. But this is one of the dangers of having a really wide stop, because that can happen. And, you know, if you think about it, Al talks about it. That's why Al uses a lot of times options. But that's why it's really dangerous to be buying and scaling in, scaling in, scaling in, because at some point you get burned. And, you know, let's say this bar alone is 8 points. So just for fun, That's about, this bar's more than 3 times the size of this bar. So from here, the low of this bar was 18. So most traders should have gotten out if they bought above here. They should have gotten out at 17.75. And this low was 90. So that's 27 points lower. So, you know, again, when you see this big bar, it's exhaustion, but it's strong enough and such a big surprise. Odds are you'll get a second leg down, but you can get a very deep pullback. And bear's probably disappointed here. Odds are you'll get a second leg. And we got a new low. Or no, we didn't. We almost got a new low. And traders are buying. So exhaustion, odds are we're going to test the high of this bar, but we may get a couple legs down. 3 consecutive bull bars at this point. It's probably always in long. Stop down here. And we're probably at least going to get a few legs up. 4 consecutive bull bars, breaking above the moving average. 5, clearly always in long, but very wide stop. And clearly it's by the close. First reversal down is going to fail. So a lot of traders will buy expecting more up. And you can see 28. They could not get a new high, but it came close and sold off into the close. So, interesting day. It's always fascinating when you see these huge moves down and very fast, and they happen in seconds. But, you know, overall, this is how channels begin. So it's a trade, it's a triangle trading range, and we get a lower high. Arguably, it's not really a major lower high, but we don't go above it. Or maybe we go above it by a tick. Either way, it doesn't really matter. It was an exact double top. And this is one of those, Al talks about it, it's one of those very low probability, but it's a bear sell, put a stop above, and they ride it down. Most double tops do not, they're hard to hold because you get this, you get that, then you get this reversal. It always looks like it's going to reverse. And then you get, then you get the breakout, follow through here, and obviously got filled. Higher probability to wait and sell here, but worse risk reward. Here the risk reward's fantastic, but the probability is really low. So obviously at this point it's clearly a bear trend or a bear channel. And you can see, here's a lower high. Couldn't get above it, couldn't get above this bear breakout, and then just reversed up. So not a lot to talk about on this day. I hope it was helpful. Thanks for watching.